Hey, Patrick Findaro here, co-founder at Vetted Biz. I wanted to give a little update as our analysts have been having discussions with many franchisors, advising our clients in part of the due diligence process, talking with the franchisors, talking with the franchisees, seeing how satisfied the franchisees are with the system, etc. And we found out that a lot of franchisees are now able to get SBA financing. And yeah, we had this conversation a year ago. Oh no, no, don't be such a dummy, Patrick. There was 14 billion SBA loans, 7A loans in the 2020 fiscal year. Yes, it's great that people are getting funded. However, given the PPP program, a lot of the SBA lenders, the vast majority, were not lending to new franchises, new businesses being open. So the first reports that we had started coming in October of future franchisees, business owners receiving loan to value where they put down 30%. So say the franchise costs $300,000 to open. That includes working capital of 3 months. They would put down $100,000 cash, and then they would get financing for more like essentially 200,000, a little more than 200,000, so they could get cover the full investment amount as well as have some additional cash reserves than the standard working capital threshold. So, as I mentioned, fiscal year 2020 for the government, there were 14 billion loans issued. And there's 100 banks that they list, the most popular issuers of the SBA 7A loan program, which is the primary financing vehicle for franchisees. There's some other ways to finance, obviously, with friends and family, some commercial loans, but it's not so common as usually the rates are going to be extremely high compared to the SBA. And you also have 401k roll that for the right candidate could be a good fit. But you have banks that range anywhere from, they lent out 52 million, Savoy Bank, 52 million in 2020 through the 7A SBA loan program. And Live Oak Banking Company loaned out 1.49 billion of SBA loans in terms of the total amount, and that included over 1,000 SBA loans. So talking to a franchisor today, we learned that there are banks out there, especially some local banks, that are lending again. There was a period where, given the PPP loan, a lot of the banks wanted to focus on that, and they were withholding back on doing SBA underwriting, especially for new business opportunities. Really excited to hear that franchises in the fitness space, healthy fast food, real estate, burgers have been confirmed of having new franchisees receive financing with 30% down and the rest financed through the government loan program, the SBA 7A program. And we're hearing rates anywhere from 4.75 to 6% and a little higher than that. So it's obviously going to depend a lot on your credit profile, your personal balance sheet, as well as the franchise brand that you choose to go with. We've personally reviewed 100,000 plus franchises over the last 30 years in terms of the SBA loans issued to those 100,000 plus franchisees. So we have a lot of data. We encourage you to explore on our site where we divide the loan default rate on an industry by industry basis, as well as comparing franchises to non-franchises. Take a look on our site, and then we do have clients that will engage us for a custom study and a deeper analysis to look at the specific risk profile of a given franchise. So it's very important to start at the industry level. Then you could go down to the franchise level. We have 50 plus metrics on our site, but if you want to go a step further and you want more information that can be backed by your conversations with the franchisees, at Vetted Biz, we're here to help you to provide better data so you can make better business buying decisions. Thanks again, and stay tuned for some updates next week.